Good morning, everyone. Welcome to the market opening update. This is Dr. Barton Jr. for Money Morning, bringing you your Tuesday morning live stream on let me make sure I've got my mic on because I bet you could hear me better if it's closer to my mouth. It is August the 25th, Tuesday. Glad to have you with us today. CJ will be back tomorrow as always. As you know, our new rhythm, CJ starts us off on Monday. Then I take Tuesday market open, and then CJ, Chris Johnson, will finish out the week for you. So glad to have you on this morning. I'm going to pull up and see who is with us today. If I can do the refresh, we'll take a look and see who is in the room. We're glad to have so many of you in from Ireland. Great to have you, Robert. Love your country. Love visiting there. We got Bill, Ken, Flo, Jean, lots of folks out there. Let's see. We got Clarence, Danny. Thanks, everyone. Sergio's here. Hey, Sergio, we'll see you later at 10:35 at the Dark Edge Project Trading Room. Porter, Jim from Miami, Coral, Danielle, Selena, glad to have you all on. We've got a lot to talk about, a lot happening, some changes in index, some changes in posture at the Fed, and some changes in tone at the trade talks with the China-U.S. trade talks. All that happening, all the market stuff going on. We've got earnings to talk about. We've got lines to talk about. And then when we had all of that fun, we'll come back and take a look at the stocks that you're interested in looking at to close out our time today. So please don't put any in the chat room right now. Don't put any up on the chat yet because I won't be able to easily scroll back and find them. But I'll tell you when, and you can type them in and we'll look at them later after we've covered all of our stuff. So to cover all that stuff, let me jump down here to the corner out of your way and I will show you, put up an agenda for you. Let's get over to, let's go over to this side of the screen because then it'll show up better on our agenda. There we have it. So here's what we're going to be talking about today, the state of the markets. We had a true break of that all-time high line at 33.93. We'll talk about that, look at that visually in just a second. Indexes are up pre-market. You might have already seen that over the China trade optimism. All they needed to say was not, here's how many extra billions of dollars of soybeans, here's what's going to happen, here's the progress we've made in IP protection, none of that. Just the fact that we're together and we think we're making progress is enough to goose the markets upward. Such is the state of the markets today and the upward momentum that we're under, and also the bit of trepidation that is around the new China Cold War, not just the trade portions, but the geopolitical portions and all the things that we've talked about in previous weeks. We won't dig into it this week, that are causing the markets to be concerned about what's happening between U.S.-China relations in this, what is truly a new Cold War between the two superpowers. So with all of that happening, just a little bit of positivity and the market's up. We're up pre-market in pre-market trading. We'll take a look at that in just a moment and take a look at that across all the indexes so we can get a clearer picture of what the market is doing in its up move this morning. So we also, as we get above this, as I mentioned, we did break cleanly, but we're going to need to see a clear break above that, another close or two above that old level to see a clear break of the numbers that we're looking at. So, so we will take a look at a couple of other things. The narrative, of course, we'll revisit that because it's so important. It's the only thing that's really important on the big picture. We'll also take a look at COVID, the curve there, and a look at the Dow Jones reshuffle. In addition to the Fed's posture change, few earnings, and then we'll get on to your stock. So there's our agenda for today. Let's talk about this S&P 500 breakout. I'll go back and take a quick look, look at everyone's coming in. Thanks everybody else that's coming in. Elvis, Thank you very much, and glad you're here. Camara, all from Florida. Peter, people that come in all the time to listen to these things. It's great to have you on, and those of you who are new to the Money Morning live stream, we're glad to have you on as well. Okay, let's talk about the chart behind me. To do that, I'm going to jump over to the other side, because as we pull up charts, sometimes we get some data over here on the hard right edge, although not many pieces of data on the lower end with the market acting so strongly. So let me leap over to the other side. There we go. And let's blow this up a little bit and still keep our February all-time highs back here. We've talked about them a lot, 33.93. That line was not able to be broken for 1, 2, 3, 4, 5, 6, 7, 8 days. A week and a half, we pounded up against that number. We talked about it last week being an almost mythical line that the market was having a very difficult time crossing. And then yesterday, on very little news impetus, we crossed it. We gained speed. Actually, the market tried to pull back twice yesterday morning, would have none of it, and just kept going up. And as you can see here now, we'll blow this up a little bit. And you can see that we are very clear of that number, closed at 34.30.31, the first close above 3,400 ever. And this morning we're up stronger too. So what does that mean? One of the key things that in case we don't get back to this chart, is that when a number like this, a very key number, 33.93, is broken, and it's broken through cleanly, a little support and resistance training here. When this resistance level is then broken, it becomes support. So now what we'll look for is that number to become support for the market and keep it above there, for the bulls to remain firmly in control, and there is zero doubt that they are firmly in control. They will need to keep the price above that 33.93 on a closing basis to stay above support and to keep pushing the markets higher. If we drop back down, we'll be in sort of that no person's land of in between, back in between these this wide gap between those last two very key numbers. So that's one number. Now that number that we were keeping our eye on, we're watching for a whole new reason, because it's going to provide support underneath the market. Now, again, I will reiterate that many technicians would look at this, see a single day, and say, okay, yes, we've broken to new all-time highs. Yes, we have to count that as a new all-time high, but has resistance been broken? Most of us would like to see 2 days, 2 closes at least above that level, and preferably a higher high at some point in time, a higher close, to say we've completely broken that resistance. Because if we came back down and battered around it in the next few days, it would just be a one-day, perhaps a bull trap. If my friend Todd from the Dark Edge trading room were in here, he'd talk about, could this be a bull trap? It could be, but most signs point to higher market push here. All right, that's what we got. And looking at our numbers here, and I think that is the high probability. Yes, we might come back and test that, but I would be very surprised if in the next few days we break below it, especially this week. I wrote in my pre-cap, and we're sending out an article tomorrow for Straight Up Profits talking about the Republican National Convention. They are going to do everything in the White House's power, to keep the markets up during the Republican National Convention, try to narrow that poll gap with between Biden and Trump. And one of the key running points is going to be, as the Vice President Pence has already said, the economy is on the ballot, and one of the things they really mean is the stock market's on the ballot. If the stock market's up, President Trump wants to hitch his wagon to that. He has for the length of his presidency, no surprise there. And they're going to do everything they can to try to keep this thing up this week while they're having their big RNC convention / party. So for the party, there we go. Okay, so that is what we're looking at for the big picture here. Let's go and take a look at what we want to talk about, some of the other places. Let's first look at pre-market trading. So let's go ahead and open up. Let's go to SPY. Let's go to a 30-minute chart, and we'll look at our pre-market data. So we're on our 24-hour data. You can see here, and we'll look at it across our indexes. We're up a third of a percent, 0.34. We're up 0.34 here, and not gaining a lot of traction since the ETF started trading at 4 a.m. this morning, but still up a third of a percent. Let's see how the other indexes are playing around. Some big news out of the Dow. We'll look at that in a second. Oh, kind of similar on the chart. If you can see, the same drawing works. The Dow up even more, 0.48, probably on some of the encouragement they got from the rebalancing that we'll again go over. And let's look at the tech stocks, who have continued to outperform except for the every now and again rotation. Looks like we're getting that again this morning. Interesting. So we're rotating a little bit out of tech, back into probably the strength in industrials, in consumer staples. We've seen this happen. We saw this happen week before last when in Dark Edge Project, we jumped into some less well-known industrials like Albemarle, like Louisiana Pacific, to make some nice 100% gains in those stocks at our second profit target. So those kinds of micro rotations. It's not a big rotation over months that we're looking at now in sectors. Things are happening so quickly. We bump into and drive up tech, and then we bop out and drive back out of tech, but just for a few days. It's usually 8 or 9 days in, 2 or 3, 4 days out. And that's kind of the rhythm the market's been having in its sector rotation, a much more rapid sector rotation than if any of you who have followed sector rotations in years past. This is a very different beast that we're going through now, especially on the upside of this March 2020 to now, to August rush to the top that we've seen. All right, we've got one more to look at. There's the fourth index, the fourth major index that we track, and that is the Russell, the small caps, and they're looking pretty strong too. They're looking up actually the strongest of the bunch, the Russell and the Dow, the two kind of bookends, the most risk on and the least risk on of the indexes, both up the most this morning. So that's interesting. We'll watch to see if this little small rotation out of tech continues. Let's see real quickly. Let's look at a couple of the Nasdaq stocks. We'll start with the big kahuna, and there's one big reason why we're down. Apple down, not on any particular news, just on profit taking. This thing has been bionic in its move lately. Let's look at some of the other big techs. Down also a bit is Amazon, and we'll look. You can see it's down a third of a percent. Google, it is down up a third of a percent, so it's a little bit stronger, and that's been the case lately, by the way. Google has been playing a little bit of catch up, and Microsoft also down just a touch. So 4 of the big 5 are down. Oops, we didn't look at Facebook. But 3 of the 5 big 5 are down, and 2 of them modestly up. So that kind of gives us the underpinning of what's happening in the market. And again, mostly driven, the biggest news, in addition to the Dow reshuffle, the biggest news, bigger news than even the Dow reshuffle, of course, is that China trade positivity, if that's a word, coming out of those trade discussions that are going on right now. Okay, let's take a look now at what's going on with the Dow. We have 3 stocks that are out, 3 stocks that are in. While we've got our chart up, let's take a look at what's happening at those overnight. So we'll keep our overnight chart up, our 30-minute overnight chart, and let's look at first the folks that are leaving. The biggest surprise, not from a dollars and cents standpoint, but from a historical standpoint, is that ExxonMobil, the last vestiges of Standard Oil, now out of the Dow. If I can type the symbol incorrectly, we'll get it up here. There's ExxonMobil, and you can see after the close, when this announcement was made, right back here, the close was this bar. So you can see the close up at this bar. And then after the announcement was made, Exxon dropping another, from 42.30 to 41.20. So losing $1 on $40, losing 2.5%. now down only 2%. It's regained a teeny bit of that. So that's what you would expect. What's going to happen is big institutions, big institutions that are trying to mimic the Dow, that are trying to have a portfolio that's balanced to follow the Dow, whatever. And of course, all the indexes and ETFs who follow the Dow are going to have to reshuffle and sell ExxonMobil, Pfizer, the next one, as well as Raytheon, and buy the new three. So let's look at what's happened here. We have ExxonMobil. I just mentioned Pfizer. I put a check mark beside that one in our notes because Pfizer, the vaccine, they're one of the top 2 or 3 vaccine companies right now trying to find that coronavirus vaccine. Had some very encouraging phase 1 and phase 2 trial numbers. I think just phase 1, I think they're in phase 2, and I believe that they have a really good chance of having a strong vaccine candidate coming out of this, but no dice for staying in the Dow. As you can see, their big drop as well. Not so much in points, but they're still down about 1.5% as well pre-market with the market up. And you'll see this same thing in Raytheon. Here we go with RTX, Raytheon, also the exact same looking chart. And the flip side we'll see for the 3 new folks. So who's kind of replacing Raytheon? Remember, the Dow is not trying to pick the biggest stocks. They're trying to pick a basket of representative stocks that represent across the spectrum. So they don't want to be all tech heavy. They don't want to be all industrials, like it's the Dow Jones Industrials. That's just a historical name. But they do want to have representation from industrial, from transportation, from consumer staples, from technology. They want to have representatives from all those in their basket. So Raytheon out. Who's replacing them on the industrial side? Honeywell. And look how well they're up 3.5%. Strong move up. I've been beating the drum on Honeywell. I talked about them on TD Ameritrade. I gave them to Charles Payne on Fox Business Network as one of my picks of the week just a couple of weeks ago, and Honeywell has really been executing well lately, and they're really well diversified. They do have some defense and aerospace business, but they also have some safety business. They do elevators. They got all kinds of stuff in their portfolio. So a fairly diversified place. And with the new news coming out of the Fed, it's going to help the industrials. Let's take a break and talk about that before we hit our final 2 stocks that are coming into the Dow. What the Fed basically said, Jerome Powell announced that their new targeting for inflation. It's it's been for years, 2%. We're targeting a 2% inflation rate. If inflation is higher than 2%, which it hasn't been for a long time by the numbers that the Fed follows, I think many people who are out there buying real stuff in a grocery store and at the gas pump may disagree from time to time, but we haven't been above that 2%. So if it's not 2%, they want to encourage growth in the economy and try to get it back up to balance to that 2%, so we don't get into a stagnant market, a stagflation, or heaven forbid, a deflationary time frame. So if it's too low, if it gets too high, then they would want to slow down. They would want to take the impetus out of inflation, which would be to raise rates, to tighten monetary policy. That's the balance that they would take. So what the Fed's saying right now is that inflation has been so low for so long that a period of time of inflation above 2% will be tolerated, and they won't act immediately to bring it back down to 2%. That is a definite change in tone by the Fed, and it should benefit inflationary type of stocks like industrials. So one thing to keep our eye on going forward. That's a longer term play, but that's one area that I've been concentrating on the last couple of months, and I think is going to continue to be a point of emphasis, is what happens with the inflationary play. What's the other inflationary play? Gold, of course. So we've seen what's happened in precious metals. Now let's go back and change back to our 2 other new Dow components. We've seen Honeywell up 3.5%. We also, Pfizer is out, Amgen is in. Here's Amgen, again, similar pop-up. It's up almost 3%, 2.9% right now. So Amgen benefiting, of course, from adding in. And then the new kid on the block, so ExxonMobil, one of the big energy stocks, out and replaced by a cloud/tech stock, software as a service. You've probably heard of that phrase, and they usually do small a, software as a service, and that's CRM. They do customer relationship management software. Their Salesforce is the name of the company. Let's pull them up, see how they fared on this news. And there you go, very similar. Pop up 2%, up over 2%. They were up over 3% and have pulled back not quite a bit, a little bit here in the pre-market. So that's big news. That's the way the Dow Jones Industrial staff are thinking, and they're reshuffling of the index. We'll get a similar reshuffling on September 21st. We'll get a reshuffling where most everybody on the planet expects Tesla to become part of the S&P 500, and there will be some other changes because some stocks like Tiffany's has been bought, and so they will no longer be part of the S&P 500. There's several S&P 500 companies that will be out, and some new ones will shuffle in. So we'll be watching for that news as well. Okay, there's a lot about that. We wanted to talk real quickly about the flattening of the curve. Let's take a look at the flattening of the coronavirus curve, and actually it's better than flattening. It is descending, and it's the rate of descending that is pretty darn good. I've called it in my notes moderate, but here, this is a flattening of the curve when we get up to the top and we start flattening the 7-day moving average, and now we're dropping and dropping, and that is a good thing. But I say moderate because we're still up at 40,000, just about 40,000 cases. Johns Hopkins numbers showed 37,000 cases for yesterday. The first time we've been that low, as you can see on our chart, from quite some time. If we go back here around the 40,000, back into June, since we saw numbers, early July, since we saw numbers that low. So that's a good thing. I think also the fact that down lower here, our mortality curve, the number of deaths per day, is remaining low, shows that our awesome medical frontline personnel are really dealing much better with this than early on. We've learned a lot more about treating the COVID disease that comes from the coronavirus, that comes from the getting infected with the novel coronavirus. We're doing a much better job with that, and also we're getting a younger demographic that are making up the bulk of these cases, not the bulk, but a larger percentage of these cases than we did in the first big surge. So, good news from the coronavirus front. I think we would all have to agree, although we'd love it to be faster, but good news so far. So let's jump to the next. The next topic that we wanted to look at. We wanted to look at the Dow Jones. Yes, we've done that. Oh, we're almost done. We're almost done with my portion. Then we can jump in and look at some of your stocks, which I know we want to do. Don't put them up yet because we did want to talk about a couple of earnings that are coming out. We've talked about the Fed posture change. We've gotten everything on our agenda. We've been so efficient this morning, although we have jumped around a little bit, as is our wont. Let's talk about this morning. Best Buy reported, and they reported, and I said this in my Straight Up Profits week starting notes yesterday. Best Buy, if you look at what Best Buy has done, and you can see they're down 3% this morning. And this happens often. Best Buy, all they have to say is that they had one shelf fall in one store and their earnings will go down. They've had some incredible earnings before, and they'll say, yes, but foot traffic was only up 3.2% instead of 3.3%, and they'll drop. It's a hated stock because people just do not like bricks and mortar stock. Yet let's look at the pricing. Let's look at what's happening on the let's see here. We should be able to go 30, 60. All right, regular session. Now we should be able to bounce over. Well, let's just go back this way. We'll look at Best Buy over time, just on the 30, just dating back here to early August. We've gone up from 100 up to 118, so gained 18% just in 3 weeks. And that kind of anticipation of the earnings can lead to a sell the news moment. I don't think there was anything breathtakingly wrong with the Best Buy numbers. They beat on revenues, they beat on their earnings per share number, they beat expectations. Forward guidance, everybody has a little bit wishy-washy forward guidance right now. So I believe this pullback that we're seeing, if we go back to the daily chart here, I may go back to the 24-hour chart and see that they've had a bit of a pullback, 4%. This is probably going to be a buyable type of pullback on Best Buy. Let's see who else is having earnings come out this week. Maybe we'll even go to a different chart if this one's not going to give us our daily chart properly. There we go. Now we have it. And you can see how strong Best Buy had been trading up yesterday in anticipation of this kind of the earnings. And I believe that's one of those things that is so very tradable. When you get that kind of move up, you know we're going to have even they'd have to have spectacular out of this world earnings to make up for this anticipated parabolic run up. I mean, clearly. And now they're going to have a little 4% pullback. I believe it's a buyable pullback because I believe Best Buy continues to execute, and they continue to be the only nationwide big box store where you can go touch electronics, not just buy them from Amazon or somewhere online and send them back if you don't like them. So I think they're going to continue to have a place a platform to work from. So who else is having earnings coming on this week? Really quickly, we have Dollar General, one of my favorite discounters, and they have been executing so well, beating the pants off of Dollar Tree. Let's look at Dollar Tree. You can see Dollar Tree has been up, but not nearly to the levels of the old highs. Compare that to Dollar General and see where it is relative to the old highs, way up above. So you can see the old highs from February back in here, and Dollar General just been killing it, doing really well post the original coronavirus dip. So we have they come out Thursday, as well as another CRM-like software as a service on the personal data, helping folks run human resources in small and medium-sized companies and working into bigger companies. Workday, not quite as strong as CRM, and that might bode well for their earnings. If they come out with some pretty decent earnings, they don't have these incredibly high expectations built in. So they could be due for a little bit of a pop, unlike CRM. Okay, so there's all of our earnings. Now it's time to turn, or not all of our earnings, of course there's a lot more. That's all the ones I wanted to cover with us today. So let's turn now to the stocks that you might like to look at, and we can even pull up, see where there is appropriate ones that will have industrial holdings, institutional holdings. We'll take a look at some dark pool data if you'd like to see what's happening in that 42% of the market that doesn't show up directly in our time and sales windows. So we can look at that data, that cool dark pool data, and see what's going on there. And I will take a look and see what you guys and gals are looking at here. There we go. Now we're looking over. All right. Here we go. All right. Is RTX dead? No, RTX is not dead, and they're still going to do well. It's just that they're getting, Exxon's not dead. They have been executing poorly. Exxon has. But Raytheon, if you look at the Raytheon chart, I believe you'll see that they're not really very strong at all, and they've been going kind of sideways. But remember, even the best of breed, here's Lockheed, they've been a little bit higher, up above the 200-day and up closer to their 52-week high. But none of the defense stocks, remember, this has been a very risk-on rally. People are looking for the highest growth name, so they're not looking to defense stocks for growth. So Raytheon's not at all dead. They're just not in the Dow 30 anymore. So I don't think it's a long-term death sentence for the stock, but it will probably kind of struggle sideways to down for a little bit. All right. So looking at, let's see, who else do we have next? I'm making sure that I'm getting some of these. Let's look at PAGS. That one I don't, that is, don't even know that name. They are making some new highs. I don't even know much to say about this stock from a fundamental perspective. Technically, they're having a nice little breakout here, so you can hang your hat on that. If we look here, they've got a resistance line right there at 40 that they've tried to get through, couldn't on a closing, one day on a closing basis, and then they've finally broken through that. So I think they have some impetus, and they should be able to get up and close this gap. So near term, they have another 10% in them, and they could have even more. So that's a nice breakout for that stock. All right, let's look at the VIX. There's not much to say about the VIX except it's going down. Let's look at the VIX. The VIX is going down, and it'll probably continue to hunker down and level down here at these lower levels. And that is because we're in a bull. We're in a sort of a grinding bull market right now. We're not going up real fast. We had 8 days of sideways movement just now. So the VIX is showing the complacency of the market. The market is going up and happy doing so. And so the VIX is down and will remain down until we get some headline risk or other things that are going to take us out of this grinding bull momentum. All right, what else do we have out there? Let's see, on Adobe, we can look at some dark pool data on them. They have some strong institutional support. So let's take a quick look at some dark pool data on Adobe. Let's see what they did yesterday in the options blocks. That usually takes a little bit more time to pull up. It did. And Adobe, as you can see, the work from home business, people having to buy extra licenses, extra seats, all kinds of stuff from Adobe. You can see how strong it's been. Right now, green, not a lot. It's kind of very mixed. A lot of red, yeah, green, red, yeah, 2 reds, 3 reds, 3 greens, 4 greens, and a couple of yellows. There's not much happening here on Adobe, and not really a $2.2 million trade there is the top one. They were puts, but they went off on the ask side, so that is a bit flat. Not much to say there. Let's see what kind of block trades we got yesterday. Only one block trade yesterday, the closing blocks. So not a lot of institutional dark pool data happening in Adobe right now to give us any hints as to where it goes. But you can see it's just strong, making a new breakout. It's one of those stocks that's gonna continue to win. They have a product suite like no other. If you want to do everything that's in the Adobe product suite, you got to buy something from them, something from them, something from them to be able to replicate it. So Adobe is going to continue to do real well. Got a question on gold. Let's look at gold. So gold has pulled back. This is a number that we're watching closely in the dark edge trading room right there on the ETF. That break from this level. The gap breakaway that we had, and now we've come back and tested it here. We're coming back and testing it again. So this is going to be the key level to hold for gold. And you'll notice that when we look at that silver is actually posturing higher than that. Actually, the drawings are pretty good. You can see where gold went all the way back down to test this breakout level. So here's the breakout level in silver. It wasn't a gap. Same breakout level. Came down and tested it down. Not as weak as gold. So people are still not using gold and silver so much as an uncertainty hedge right now, but as a risk-on hedge. They're saying we like silver better than gold, and that means that there is more risk-on or more growth desire, less defensive posture desire, more growth desire in what people are doing in their precious metals trading. So let's look up, Pfizer and Microsoft. Pfizer, this has been a bit of a game changer for Pfizer that we have them getting popped out of the Dow. They're only down 1% today. So Pfizer's still a very broad and institutional holding. If we look at what's happening in Pfizer, check this out. Here's Pfizer in the, I'll pull it up. Look at the blocks going off in Pfizer. Now it's a smaller $38 price stock, not a smaller stock. Look at this, millions, this 3 million shares after the market. So do people know that they're going to get punted from the Dow? It looks like it. 1 million, 3 different trades that are 1 million shares or above, and another 500,000 shares there that went off yesterday in Dow in huge blocks. So lots of activity, anticipating what the Dow is going to announce, perhaps so. But Pfizer has a lot of folks, and that was probably the rats bailing off the ship with the anticipation of Pfizer's Dow move. So that's probably what most of that was. Let's look at, somebody's looking at ResMed, another in the healthcare industry here. And don't like what's happening in ResMed. I think they've got to hold this support level, or there's more, or it's a lookout below kind of situation. So they've pulled back pretty strongly this week. And you can see right where I drew that line, you can see how that is a strong support line. So there's your line in the sand for ResMed. Not much to say to that, other than they have to hold that. If they've got any chance of turning things around. They've been getting pounded while the market's moving to new highs. Let's see, what else are we looking about? We got, the gold miners. So the gold miners, it's such a different game. Let's see here. Well, we could look at some of the big folks. Here's Newmont. They've been pulling back, but the chart, if you look at the right-hand side of this chart, it looks a bit like the gold chart. It just they haven't come down as far to this original pullback. But the gold miners are some tough plays. Let's look at Barrick. So the biggest of the big in the golds, so in terms of production. So they've been remaining pretty strong. So Barrick has been remaining strong, and we've heard about Buffett's stake there. So lots happening in the gold miners, and we could look at the juniors, and they're going to be even jumpier. But I tell you, I like the metal more than the miners here. That's a personal take. I like the metal more than the miners for the short to intermediate term. Let's see who else. So is there a reason to buy Tesla before the split? I don't think there's a big reason to buy it before the split. I think there may be a reason to buy it on a pullback before the September 21st date. So as we approach that, but boy, when you get a parabolic move like we did here, and then we got a pullback. Now we've had the parabolic move. We had a pullback yesterday, and you can see down another $46, down 2%, 2.5% today. Wouldn't be surprised to get a pullback here. I would be surprised if it's bigger than 1,800. So I don't believe we should pull back below there. But yeah, you can trade Tesla, trade in and out of Tesla going into the S&P 500 announcement. I think that's probably a pretty interesting play. But I don't think just the split is going to be that big a deal. It'll help. You'll get much more trading activity when it goes for that 5-to-1 split. Apple's doing a 4-to-1 split. But I don't think just buying it and holding it into the split date is a pure play. I think we got that information and that move up from here. Remember, that was the day that it moved up. So you can see we've gone up from 1650 to almost 2100, a huge move. So I think that's already been, the goodness of the stock split has already been priced in to Tesla. All right, let's see if there's a couple of others. Smaller, we already got Adobe. James just went over that one. So we've got 2 others in here. Let's see what we've got there. Yeah, these are not very big institutional ones, so we won't be able to get much out of Acadia Financial, Acadia Pharma. They trade about 2 million shares a day, and what can you say about this chart? I don't know what they have, what drugs they've got in the pipeline, what's going on, but this is a lookout below chart. I mean, they've broken all the supports they've broken all the supports here. Here was the major support. Whoops, let's make that a little smaller. Here was the major support. You can tell going all the way back to here. See what strong support level 45 was. Once they broke that, they broke down through. You could argue 40 because it was a whole number, and you could see some activity back here. So they broke down through 40. Now it's at 38. So the last refuge here is 30. This is just, you know, if you've got some reason to fundamentally to buy this, you could buy it on a pullback to 35 or 30. But boy, not much there that I'm liking, especially technically on this chart. Okay, let's see what else is happening here. September 18th is battery day for Tesla, so there's from thank you very much for that one. So yeah, we just did gold. Alibaba, they've really bumped. Let's look at one more. We can look at Alibaba, and we're just 4 minutes, 3.5 minutes from the open. So let's look at let's take a quick look at Alibaba. Excuse me, got a little dryness in my throat. We drew this box a couple of weeks ago for Alibaba as we were talking about them coming into earnings. They've been working inside the box. Their earnings didn't do too much. They had actually a pullback the day of earnings, and now they've had strong drive up. Again, with the relaxing of the tensions, the short term, I want to emphasize the short term relaxing of the tensions between China and the U.S., that pop up in Adobe is, in Alibaba is not surprising at all. I think Alibaba, again, I'll just reiterate my long-term stance on Alibaba. It is a stock that you want to have in your portfolio 5 years from now. How you get there will be up to your risk discipline. But I think finding chances to buy this on pullbacks as the new Cold War grinds on will pay off for your portfolio handsomely. It is just a legacy stock. They are going to continue to be the leaders in online in China, and if you want a little bit of balance, you could put in JD.com. That is another of my favorite stocks in the China portfolio. And look at that rocket; it's been going up. We talked about it the week before last as my favorite, my number one China stock, and here's why: it's just going through the roof. I think, again, on a parabolic move like this, I don't like jumping in right here on either of these, but find places on pullbacks to add them to your portfolio. And if you want to trade them, that'll be fun. They're going to bounce around a whole bunch. Remember, though, in trading these stocks, these China stocks, they have big gaps overnight. So because most of the trading thought process is based on what's happening in news coming out of China overnight in the U.S. market time. All right, so I like them both, but I don't like them up here. I'd like to get them both on a pullback. So glad to have everybody on here. I bought some in May and tucked it away. Very nicely done, Sergio. All right, with that said, let us finish up there. And Danielle, yes, I mentioned that earlier if you weren't on the live stream, that Apple's pulling back today. I think it's just pure profit taking. There wasn't anything particularly up in the news this morning about Apple. So I hope you have a great rest of your day. Tune in tomorrow at 8:45 to enjoy CJ again. And he'll have some more fantastic insights like he always does. And I'll look forward to seeing you right here, same bat time, same bat channel, next Tuesday at 8:45 for your pre-market morning update. For Money Morning, this is Dr. Barton Jr. And I'm wishing you a great rest of your day. Stay safe out there, and God bless you.